Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. I am joined today by three wonderful participants on the CSE. We have three great companies, Getchell Gold, Outback Goldfields, and Tarachi Gold Corp. So thank you all for joining us today. This is part of our PreDAC forum that we're doing in anticipation of PDAC this year. At the CSE, we've done this. I think this is our third or fourth year running. Unfortunately, this year it has to be online, but luckily we get to have participants join us that aren't necessarily in the city, such as Lorne who will be speaking with us today. He's down in Mexico on a project right now, which is exciting. He'll tell us all about that. So thank you again for joining me. We're going to start off with Mike Sieb. Mike Sieb is CEO of Getchell Gold. Mike, tell us about Getchell Gold and about yourself.
Sure, and it's president of Getchell Gold.
President of Getchell Gold.
Getchell Gold was formed about 2 years ago. We've recently acquired actually a major asset in Nevada, a fairly sizable historic resource, and it was a wonderful foundation to start from. And we've just come off an extremely successful drill program that has not only sort of proved the high-grade component to the project, but also has shown that the mineralization is thick and broad and has some significant continuity to it. So we're kind of sitting in an extremely comfortable place right now, and it really fits into the question that you're going to be asking us about current financing, because actually that's the path that I'm on right now.
Wonderful. And I mean, Nevada has got such a deep entrenched history in the mining space, and it's definitely well known by investors, wouldn't you say?
Oh, it's just a wonderful jurisdiction. I mean, if anybody is familiar with Nevada, I mean, it consistently ranks in the top 5 jurisdictions in the world. And you're comparing a state to vast countries. So it's on the global stage. I mean, it comes in fourth in production of gold, behind China, Australia, and Russia. So, wow. So that's kind of a pretty good pedigree to start from. And so there's major entrenched history there, and there's incredible incentives and support.
Amazing. And Mike, you said that right now you're in the middle of a financing. What's going on the ground though right now with the project?
Well, we're in a hiatus right now. We just came off a drill program at the end of last year. Of course, like every other company, we've been waiting for our assay results to show up. We finally got them in February, so they're kind of like fresh off the wire. We're currently planning for our 2021 drill program, and we are going to be one of the most active junior mining companies in Nevada this year.
Well, that's very exciting. Okay, Mike, we're going to come back to you once we get all of our intros out of the way to talk further about that. Our next guest is Chris Donaldson. He is CEO of Outback Goldfields. Welcome, Chris. Thank you for joining us.
Hi, Anna. Thanks for inviting us on the show here. But yeah, Outback Goldfields, a relatively new company. We came on board in October. I'd been with Western Copper and Gold for 8 years or so before that. And we just did a bit of financing just at the year's end. So I'm happy to chat about that. But Outback has just acquired 4 properties in and around the Fosterville mine in Victoria, in the historic kind of goldfields of Australia. And it's a hot jurisdiction right now. I mean, you got Kirkland there who, of course, 5 years ago discovered this zone, which has made them the highest grade, highest margin mine in the world. So it's what is old. I mean, this is a historic 150-year-old jurisdiction, but suddenly in the last 5 years has garnered a lot of attention. So we just launched our drill program last week, and yeah, pretty excited to see results coming out pretty steadily here over the next few weeks.
I'm excited to hear more about an Australian project, Chris. So very excited to have you be a part of this. And you said you listed with us, was it October, did you say, of last year?
Well, we've been listed with you guys for a couple of years, and more of a shell company, but we just had our qualifying transaction in, I'm going to say November, when we acquired the projects from a publicly listed company in Australia. And then subsequently we did our raise. We raised $11 million. And now it's go time. So I think things are starting to happen.
Well, and I know that over the past 2 years, I've had so many dialogues with Australian companies, whether they're public over there or still private, that are wanting to enter the Canadian capital market. So that's pretty exciting to see that stuff come to market here. We're going to end off with introductions with Lorne Warner. Lorne is an old friend of mine, not old, but just a friend that I've had for a long time. Thank you so much for joining, Lorne. Tell us about, about Tarachi Gold.
Just as a side, today is my 60th birthday, so you hit it bang on.
Oh, there we go. Happy birthday.
Happy birthday, Lorne.
It's like, oh my God, she's just on cue, isn't she?
I had no idea. Well, happy birthday. I owe you a drink next time I see you when you make it back to Canada. Okay, so you're down in Mexico right now. Tell us about Tarachi Gold.
Well, Tarachi Gold has been around for only about a year now in regards to working in Mexico. We have some great properties. One of the key things for any junior mining company, of course, is having good management in Vancouver, but having really good management in the country you're working in, so key. And then third, the projects. Our most exciting aspect right now is we've just acquired the Magistral tailings and plant. So we're actually going to be going into production, hopefully within 12 months. That is a key area for us to focus on right now. It's just in Durango in Mexico. There's a lot of tails there for us, very high grade, just over 2 grams in the tails. There's lots more in the area, still a lot to be found. The mining is still not finished in that area too, and our plant actually has a ball mill. So we're very versatile in that. That's gonna be one of our keys, focal points for the company right now. But at the same time, we have some good exploration plays. I like ground, as Chris had just mentioned, where there's been some work. You have a little bit, there's some information there. I mean, I spent about 6 years in the Timmins camp, and once you learn that, you get a little information and add to it, that there's great potential, and you're probably going to be more successful in somewhere where people have already done a little bit of work, and that's what we're focusing on here in Mexico.
Amazing. Well, you know, for our audience that's joining us today, I encourage you to go check out all of these companies. And I'm sure all of their contacts are available on there, or feel free to reach out to me and I'll make an introduction, because they're all great projects. I noticed as you guys were all talking about your projects that the one thing that isn't going to be a part of the dialogue today, but you might want to touch on it at some point, is these are all pretty safe jurisdictions, wouldn't you say?
Yes.
Yeah, so it's a bit of a different dialogue, and I'm kind of glad that it worked out this way, that you guys are all in the jurisdictions you are, because I think raising capital in more you know, risky jurisdictions is a completely different story. So we'll keep it focused on that. But all of you have had kind of a vast background in raising capital. I know specifically within the mining sector and maybe some other sectors, and I know you've all done it long enough that you've seen probably the good, the bad, and the ugly. So that's kind of what I'm hoping to get from you guys today. I think it's so neat. I mean, you know, we are the exchange for the entrepreneur, by the entrepreneur, and you guys really are the epitome of that. You guys go out and you run your companies, you run your programs, and then you go out and you raise capital as well, which is definitely the definition of a true entrepreneur. So Mike, let's start with you. One thing I wanted to ask you is, when you're ready to go and raise capital, what kind of stuff do you do to prepare yourself? And I'm going to ask all of you guys the same question, but how do you prepare yourself, whether it's your technical information, whether it's timing of year, or creating an IR program? What do you do to get ready?
You want to be in a strong rather than a weak position. I mean, it's the same as a negotiation. I mean, that's kind of the way you have to look at it. That's what you're walking into. You want to be kind of walking through the door and sitting at the table in a fairly strong position. Because you know, if you're in a weak position, you know what's going to happen to you. So that's kind of like the first thing. So you want to, there are things that are under your control and things that aren't under your control. So you want to take those things that are potentially under your control and try and stand them up as best you can to give yourself that strength and flexibility to provide the best return on the transaction for your company as well as your shareholders.
And would you say a strong position, and stop me if I'm wrong or right here, but is stuff like the, you know, the trigger price that you're raising capital versus what it's doing on the market, the type of market that we're having, the place that you're at within, you know, where you are in the project development of the exploration project itself?
Yeah, no, absolutely. It's all those factors, and I mean, it's really difficult to be in a position where you have control over all those factors to make them look the best and shiniest and most sparkly kind of at the point in time. But you want to try and put your best foot forward. So yeah, so you want to you want to time yourself so your asset or your projects look the best. You want to acquire those projects that make your company look the best, and you want to address the market to make yourself look the best. So yeah, so it's a whole combination of things, and,
yeah.
and it's discussions, it's communication, and at the end of the day, it comes down to timing.
You know what you guys do is definitely a form of art. I mean, there's no question about it. Like you said, there's a bunch of stuff that all goes into that. Chris, we're going to go to you next. How do you prepare yourself for going out to raise capital?
Yeah, I mean, I think Mike was bang on that. I mean, it's not, you don't just suddenly decide to go for capital. You know, timing is such a key part of it, that you need to always be marketing. You need to have the story known before you go out. And then when, you know, I'm not with a copper company, but for instance, if I was with a copper company today, we blow through $4 a pound, I could get all the money I wanted, right? So you need to keep guys up to date with your story, and then be opportunistic when it comes in favor, and that you are a known entity and someone who is trusted, right? So it's not, you know, it's very difficult to cold call and suddenly say, hey, invest in us, especially now when there are 2,000 plus junior mining companies out there between all of the different exchanges, to cold call a guy and say, hey, you know, put some money into us. They're going to look and want to know the history and your management and all that. So if you've already done that pre-work, then if you have a good, solid investment proposition, you know, when the time is right, and you've got things kind of not stacked on your side, but more favorable on your side, you'll have much better success. And then the only thing I'd add to that is to really tailor your message to who you're speaking with, right? And that might be just, for me, it's always keeping it simple, because I'm not a complicated guy. I'm not a geologist, what have you. But the investment proposition has got to be something that you can sum up in a few sentences. That if it's in the case of a broker, he can talk to his client in 10, 20 sentences, right? Or sorry, 10, 20 seconds. And having that very, very clear message as to why someone wants to invest when the opportunity is right is absolutely key.
You know what, I laugh when you say that, because I learned early on in the industry that if somebody was speaking really, really quickly to me, it usually meant to walk away. If they can say it clearly and in about 20 seconds, you might want to listen further. But if they're talking very fast and they don't even really know what they're saying, it's usually a good sign to hold back. Chris, you mentioned something about cold calling, and I think all of you, especially if you've had any kind of tenure in the industry, is you all have a rolodex. And for those millennials watching that don't know what that is, you all have contacts in your phones. You know, that you've generated these relationships over the years, whether it's going to conferences or road shows, and those are international. I know that you guys have relationships all over the world. And when you're working on a project, there's certain phone calls you make. What does that look like? Do you have brokers? Do you have just individual investors? Are you out there trying to bring in new people? What does that look like for you?
You're asking me?
Yes.
Yeah. So, I mean, it's changed a little bit, you know, and I feel sorry for guys just getting into the business who in this COVID age can't get out and shake a few hands, because it really does help when you then are able to do a Zoom call or and follow up with them to have that relationship where there's some trust there. And you know, it'd be very difficult, I think, to start out, you know, with no, you know, formal introduction to bring an investment thesis to it. But what does it look like today? It's much different than it was last year. I mean, I was an IR guy for many years and corporate development guy, and was at the conferences and so forth. And now it's, I mean, I'm sure the other guys will agree with us. We're just one big Zoom day. That's what we do. And which is great if you know somebody and can provide a bit of an update, but it's difficult if you're trying to make an initial impression. So yeah, it's good and bad. We're able to, the good is that we're able to appeal to more of the masses now. I think there's many more resources out there to put out Zoom calls like this, or panel calls, or have various digital things, come in, and you're able to do your own in-house productions and get the message out, and which might go to the masses, but unless the masses are all buying, it doesn't really help you. So in terms of just pure reaching pure mining investors, it's more difficult, for sure.
Yeah. Yeah, absolutely. And I mean, let's be honest, I'm so thankful for the retail market that has happened over the past year, but a lot of that retail market is new investors, and the mining space is probably the hardest to absorb and digest as far as understanding what's a project of value and what isn't. But I think we're starting to see that a bit. Lorne, we're going to end off with you with this question. I know you've done this a long time, and Lorne, I will preface our audience with that Lorne is more on the technical side, but I know that you've raised a lot of money over the years and projects all over the world. So how do you prepare yourself when you're going out to raise capital?
Well, I think it was answered a lot by Mike and Chris, but I think a point here for me, it's important, is that contact. I'll be sure, so glad when COVID's over and we can travel again, because it's so important. You have your venture capital investors, we'll call it that, and then when your project gets a lot more serious, you're going to be moving on to Toronto or New York and other places like that, and they don't invest unless they get to see you a few times, you give them the talks, and they follow you and they see you do what you say. And that takes time, it takes effort, but it's key, because when they feel comfortable, and the only way they really feel comfortable is they get to know you. I get to, sit down for a supper with them, but have these meetings with them. They get to see your body language, see that you really do believe in what you have, and that it's going to be a great project. And those sort of things are key. The Zoom is great, but you really do need that personal contact to get those relationships developed fully.
Well, I think you bring up a really good point, Lorne. Two things. One is that we like working with people we like. So there's an element outside of Zoom where you become friends with people, you become colleagues. And when they're writing a check, they want to feel like you're a friend, right? And the other thing is trust. They want to trust that when they're writing a check, that you're going to go and execute a good program, as fiscally conservative as possible, and you'll be careful with kind of what they've put into the company. And that's really important. I'm going to start this next question with you, Lorne, and make my way back around. You talk about traveling. What have you found has worked for companies better than other things? So I think we know, dog and pony shows, road shows, there's one-on-one conferences, there's, PDAC, 35,000 people. What have you seen work most successfully for companies?
Well, for junior companies, again, it's getting out, actually meeting those people in Toronto, New York, London, wherever it is, and making sure they're always up to speed on what you're doing. You raise your capital, okay, you got your $10 million, you go and do your work. You have to be in contact with them all the time, letting them know things are going well, what's updating them, and not waiting until you're just about out of that money and going back and saying, hey, I need some more money now. Please give me some money. Yeah, things are looking good. That's not how it works.
Yeah, it's really those individual relationships.
Totally.
And what about IR programs? I mean, I'm going to touch with the two of you guys on this as well, but Lorne, have you found, sometimes I see junior companies create really big IR programs, and other companies just kind of, we're going to do this step by step all the way. The whole team's just on the phone, reaching out to our contacts. Have you seen one work better than the other, like putting a bunch of money into a big IR program for a smaller exploration company?
I'm going to have to say that, yeah, that does work. But again, that's sort of to me, a temporary fix, just my side of things. I look at you getting those IR, getting the start, getting going, but all those relationships and meeting with those people, getting everyone to know exactly who your team is are in, let's say, Vancouver, who's the team in Mexico. Just get the full meal deal out there to them so that you get that comfort level, and then it works. If you're good explorers, it'll all come together.
Absolutely. Chris, what about you? What have you seen work when you're out there?
Yeah, I mean, I think Lorne's right. I mean, I come from a marketing background. You need to market, but ultimately you need to make a real company. So, you know, we're an early stage company, new company. We need to get eyeballs on, but ultimately we will be judged by what we discover, what we find, right? So, you know, to Lorne's point, it can be temporary unless you really back it up. But maybe a comment I'll make, and I don't know if it's good or bad, is what's been different, you know, over the last few years is that the reliance on third-party endorsements, and that's another way of saying newsletter writers, and is much different than what it was a number of years ago, when really, I mean, the holy grail was, oh, what kind of coverage you have, what kind of coverage you have. You just wanted the bankers to give you endorsement. They were the ones giving you the walk around in various markets and so on. And that has really diminished for a variety of reasons. But it's now, good or bad, very important to have people write you up. And those are not necessarily members of banks.
I think that's a really good point. Have you also had the experience, and everyone else can jump in here if they have, but there's a lot of new technology that's out there, whether it's drone footage or just a kind of technical mapping. There's a bunch of online forums that have worked that really kind of can provide this guidance to a potential shareholder as opposed to actually just taking them on site. Have any of you used any of the new technology that's coming to market?
I mean, absolutely. So, I mean, there's a company, I mean, I'm not trying to endorse them necessarily, but Verify that, and there's a number of them that do, you know, kind of virtual reality, shows on the properties as if you were there. We're doing virtual tours. You're seeing that now. Districts are getting together and saying, hey, this is the reason we're coming there. I mean, you need to, because guys can't come to site. And I mean, imagine trying to buy a house and not being able to tour the house, you know, and some of these bigger funds, if you're trying to get them to come in and put a sizable investment into your property and they can't get there, what would you do, right? So you need to do these other things, and technology has played a huge part of it, and it's only growing. So you have to embrace it. And so there are some good tools out there. I still don't think it's as good as in person, but you know, This is the world we live in. We need to embrace it. Absolutely.
And shout out to Verify. They're a Vancouver-based company. Is that right?
They are, yeah.
Yeah, they're a great company. Yeah, they do some good work. Mike, I'm going to jump to you next. The one thing I wanted to ask you, well, first I wanted to ask you what you've seen work and hasn't worked in your past, but also I know you're raising capital in this moment in time. So why don't we start with, what has worked for you as just kind of a general strategy?
Well, I mean, Chris and Lorne, I think said it quite nicely, is that it's communication, relationship, one-on-one, building trust. That is what has worked for me the best in the past. I mean, everything else is support, and the support is extremely valuable to really kind of move the story along and move the relationship along. But it has really been the one-on-one meetings. I mean, it's quite funny. I mean, there's really large conferences out there, and you go to them and there's tens of thousands of people there. It's not the conference itself that's important. It's the meetings that you have at the venue. And it's quite funny. I mean, you travel I would travel from Vancouver to Toronto. And a lot of the meetings I'm going to have in Toronto is actually with Vancouverites.
Yes.
Because you're sometimes so busy in Vancouver that you don't run across each other. But these conferences provide you the venue whereby it gives you the ability to actually sit down and meet with them and talk. And that's what I found in the past as to be the most effective, is kind of like the one-on-one meetings.
Don't you find that when you see them in Toronto, you go, you know, we work just down the street from each other. We should see each other more often. And it's still the next PDAC that you finally see them again?
That's right.
It's very true.
One thing I wanted to ask you, Mike, and I'll start with you, is let's also talk about types of financing. So obviously the mining space has a few unique elements to it that I'm sure you've all used or avoided, whatever that might look like. So a few things. One is obviously it's been the land of the private placement. We don't see as many shelf prospectuses, and especially in the junior mining space. Typically we'll see more of the private placements. And I think one thing that's really unique that people need to understand about the private placement is that you need to be an accredited investor. It's not done through the regulators. And so it really is that one on one. You know, there's people that could go out and raise 10 million and get it in one check. And in bad markets, you could go out and raise 10 million and it could be, you know, 400 checks, right? Which is lots of sub forms, by the way. So as far as kind of the dynamics of raising within that space, there's flow through shares, there's private placements, there's sweeteners attached to those private placements. What have you found is the most well received within the mining space? The
traditional approach is probably the one that you see the most prominence of and the most reliability in. It's a known facility. People know what they're getting into. The company knows what it's going to generate, and so the traditional private placement is, you know, fairly solid, and that's a fairly solid approach. There are alternates, of course. I mean, there's debt facilities, there's streaming deals, there's you know, like there's a percentage interests to kind of major foreign parties. They all come with potential danger to them. If you're not, and it's really going to kind of go back to my very first statement. If you're doing any of these facilities that is kind of a higher risk for the entity that you're dealing with to take advantage of you, the only time that it actually works is if you're in a buoyant enough market or you have a strong enough project to kind of carry you through the danger zone and the minefield that's associated with it. And so if you are going to start looking at and entertaining like alternate facilities for investing, you better know who you're getting into bed with and the timing that you're going to do it, and be absolutely confident that you're going to come out of it ahead, not taken advantage of.
Yeah, a bit of a reverse engineering, right?
Yes.
Yeah, absolutely. Lorne, what about you? Any you know, traditional private placements? What has worked in the past?
Basically, being a geologist, it's like, okay, yeah, you got the money, I can spend it. Sorry. I've just, you know, on my side, I go to a lot of the talks, I give the presentations, and for the most part, yes, you're looking for good investors. You know, once you got a developed project, you go to you go to the Toronto. Good investors in Vancouver too, but once you're moving along, the bigger investments, you have to move to the bigger cities, Toronto and New York and London, places like that, to get those investments. And the people that are going to be behind you. You're looking for the right companies, the right funds that are going to support you through your project. And that's just the key I've found in the past for the companies I've been working with.
You know, I think the one thing that's unique about all three of you is that you're all currently active in jurisdictions that have probably a very big database of investors in the mining space. I mean, Australia has probably one of the most active mining investor in the world. I don't know if it's close to Canada, if we're on par, or if they're higher than us, but they're very active in investing in the mining space. Chris, have you found that being in Australia, have you found the ability to raise capital from Australians in a Canadian company?
Yeah, I mean, I have, and our recent financing, I think 20% or so were from Australia. Part of that is due to our chairman, Craig Perry, who's an Australian and been there a long time. But yeah, I mean, I don't think we're quite where we want to be as an industry yet. And unfortunately, we're still all picking off mining investors, and which is, it seems to be, you know, the traditional guys, which unfortunately is just moving money from one company to the other. And I think what we're all hoping for, and I think we're on the verge of having, is you know, outside new generalists and new investors come in. And that would be something that I think everybody is going to welcome. And we may see that, right? I mean, we're seeing that with the, you know, hashtag silver squeeze that's coming out that didn't quite materialize yet, but we might see it. Maybe we're seeing it with, I saw today, now it's the copper crunch that's on the way, but you know, and we need a little more excitement and new investors to come in. But, you know, back to your point, yes, I mean, obviously very nice to have investors from Vancouver and Toronto and Australia, but these are traditional guys who always have a certain percentage in their portfolio. I'd like to get beyond that.
Yeah, I mean, I think, I would imagine you guys all feel that same way, is that you probably have, you know, a little black book that they invest in probably hundreds of deals a year, right? And that's what they do. And we definitely need that next market to come into place. And you know, let's be honest too, you're talking mostly private placements. Most of the young investor that's coming to market wouldn't necessarily be considered an accredited investor, which I think we could probably make some headway there as well, as far as just capital markets in general. You know, maybe we could progress a little bit as far as the accredited investor and open up some opportunity for younger people out there. Lorne, have you found that when you're raising capital, it's really important to have kind of all of your technical stuff as up to date as possible? Is that kind of integral in raising capital?
Yes. I mean, when you go to these talks, the technical side of it, you want to be right up to speed. And you also want to show the energy of what you feel about your project. Again, that's where I come back to that personal side. If you believe in your project and you show them what you have and why you think they should invest, and they see that energy, that goes quite a long ways. But that may only represent, let's say, about a third. The rest of it is the aspect of management, your company itself, how much stock do you have out, control, and how much you know, management owns, and that is very important to the funds we talk to. For example, they want to know that everyone believes in this project, and that's key.
Yeah. I mean, and you guys are pretty accountable. I mean, Mike, when you say, when you go and raise capital, you guys have all talked about the communication you need to have with potential investors and existing shareholders. You're very tied to them. I mean, if you go and spend the money, you need to let them know where you spend it, the results that came through, especially because maybe like your dad, you have to go back for your next allowance at some point, right?
No, it's part of the relationship building. And you're kind of along for the journey. And anybody who travels together along a journey, I mean, you start building a simpatico to it and a responsibility to each other. And it's not just the person in the vehicle with you. These are potentially thousands of people you've been in communication with and have either supported you in the past or are currently supporting you. It's extremely important, as well as you're kind of I mean, you're a steward of the company, you're a steward of the shareholders, and you have a certain obligation to them, and you're beholden to them to a certain degree. So absolutely, yes.
Well, listen, you guys have been amazing. I'm going to end off with one final question, and I might ask you guys to come back, because I feel like we could dive further into some of this, and it will be interesting to see, maybe we revisit this dialogue after PDAC this year and see how things went virtually for all of us. I don't know about you, but I think I actually have booth duty this year virtually. I'm not sure how that's going to work. I also asked my bosses if I'm allowed to have just as much wine sitting at my dining room table this year. Mike, what is your advice if you're out there and you're starting an exploration program, or you're with a company? What would your advice be to somebody who wants to go out and raise capital today?
Well, just don't focus with blinders on to what exactly you're doing at that point in time. You really have to strategize and look forward to everything that you're going to need to do over the next year or 2 years, and plan for it. I mean, that's really, you're not just looking at the current drill program. what is this drill program leading to? What do I need to do to tell the story? What do I need to do for my next drill program? How much money do I need to raise? And there's one also, there's one tried and true recommendation. When you finish the current private placement, you should be thinking about and starting your next one. It's absolutely important for a junior mining company to never get down to the point where you're struggling or in trouble. You always have to be thinking of your next, where's your next money coming from?
Yeah, absolutely. I think Lorne and I were involved or somewhat involved on a project that took us so long to raise the capital. By the time it was done, we were all exhausted. We all wanted to go to sleep for a few months, but it was exactly that. The money was raised to go towards a drill program, and it was back to the races. You have to go out and start thinking about how to raise money for the next round. I don't know if you remember that, Lauren. You might have blocked it out of your memory. Chris, what's your advice to somebody who wants to go out and raise capital?
Yeah, Mike, I think you're bang on that. I mean, look, you can put a full court press on anybody and do a massive sales program and raise the money with, very lofty promises. But, if you don't fulfill those, or if there's a couple of hiccups along the way, you're going to have to do it all over again. And now you got to do it all over again with less credibility. So, Mike, you're right. When, you've got to give them the long-term plan. I mean, it's great when guys come into the industry or into the market. But ultimately, you really need to sell them on your longer-term vision as to why they're investing. Otherwise, your job is going to be very difficult, the next time you want to try to raise some money.
Absolutely. And Lorne?
Exactly. Well, I think we're fortunate in terms of we've all got the history. I think we've all done fairly well on doing what we say, and that really helps out. Some of the other people, let's say, who haven't been in the industry that long, it can be a lot more difficult. They have to really plan in advance, like Mike had said, far enough in advance when they're starting out that already basically have it planned who they hope to have as their investors, and those people are already aware of what they're doing, even before they might be fully able to start running. That is so key. You want to have people to really understand who you are and what you're planning to do.
Wonderful. I looked at all three of you guys leading up to this interview, and what was so exciting to me was to see, three projects that have had some activity on them and some capital that are raised on them. And it doesn't look like that's going to end in sight. Your share prices, seem like they have some nice support levels. I mean, these are all really healthy things that we want to see, and those help the industry as a whole, right? I mean, you want to see everyone kind of on some kind of support level within the marketplace to be able to go out and raise further capital and to do more drill programs, because that's what this is all about. So congrats to all of you on all of your projects, and I'll definitely be watching you. I encourage our audience to keep watching you guys. All of their information can be found on their websites, or you're always welcome to reach out to me and I will make personal introductions to them. Thank you so much, all of you, for joining me today. I really appreciate it.
Thanks, Anna. Thanks, everybody.
Thanks, Anna.